Yeah, hello everybody. My name's Luke McBain. I'm here with my wonderful brother Chad McBain, and together we're two brothers and Bitcoin. And let me see if I can immediately um, share my screen because you brought us something interesting to look at. And let's have a look where that is. Here it is. Okay. Let's have a look. Because there were some news in October which were really interesting from coming from central banks of all places.
Yeah.
And well, surprise, big surprise, not. Um, but of course, that's sort of like if you read that, you start really, and I mean, I did read into it, you start to get worried somehow. But maybe today you can take away some of those concerns, because in terms of the price, actually, I didn't see any impact on the price concerning these statements, but they're interesting statements nevertheless. So we have here an article saying ECB and European Central Bank paper claims Bitcoin. Paper claims older Bitcoin holders are exploiting new holders. Oh, okay. So there is apparently something going on which is unfair. It's interesting. I don't know. I don't even know if that's part of the article, but just as a flavor, it says since its introduction in 1992, the euro has lost approximately 85% of its value against gold due to monetary inflation. So just probably that's sort of like to set up the article. Um, just because I think that all the articles are still a little bit nice towards this paper, the central bank paper. I sort of pulled it up and started reading it, and it is rather harsh. So I wanted to go back to the original because the articles themselves are all very, yeah, I mean, they sort of relativize this and say, well, they don't see this, but they don't really take up their language because their language is really very harsh. And so this is the paper itself, and just to give maybe some flavor of this abstract to see, how much they condemn Bitcoin in this paper. Um, just to say, like, okay, the original promise of Nakamoto um, to provide the world with a better global means of payment has not materialized. And the argument is it has increasingly shifted Bitcoin as an investment asset promising high capital gains. But there is no economic function to justify this valuation. So, there is always this argument, well, there's no cash flow with Bitcoin. It's not productive. Um, Most economists, that's also an interesting statement, argue that Bitcoin boom is a speculative bubble that will eventually burst. We analyze in this paper the impact of a Bitcoin positive scenario in which its price continues to rise in the foreseeable future. And this is harmful and problematic. Since Bitcoin does not increase the productive potential of the economy, the consequences of the assumed continued increase in value are essential redistributive, i.e., the wealth efforts of consumption of early Bitcoin holders can only come at the expense of consumption of the rest of society. So basically, they're making the argument, well, that this is a snowball system. This is a snowball system which comes to the detriment of the later adopters, to the benefit of the early adopters. It's interesting, although basically they say there's two possible outcomes. Either the snowball system will burst, the bubble will burst, or if it doesn't burst, then the later adopters are the ones who actually have no benefit from Bitcoin. So this is their argument. So the fundamental assumption is this is a snowball system. There's nothing there basically. Um, if the price of Bitcoin rises for good, the existence of Bitcoin impoverishes both holders and latecomers, both non-holders and latecomers, and that's it. And they even go as far as that. While previous discussions on the redistributive effects of Bitcoin assumed that badly timed trading was a necessary condition for losses, this paper shows that neither poor timing of trades nor holding Bitcoin are necessary for impoverishment under a Bitcoin positive scenario. So for them, even a Bitcoin future in which Bitcoin keeps rising like gold, um, is a bad future. It's just going to be bad for the later adopters or non-holders. So interesting also because somehow, maybe you can correct me. So first of all, the underlying assumption, it's a snowball system. It's a it's a pyramid scheme basically. And the other assumption is, and that's also interesting, they say, well, the later adopters are the one going to suffer. Well, why are they going to suffer? Because we know why, because fiat money is just going to keep on losing value. That's
Right.
why they're going to suffer. So that we are sort of, I mean, I'm not in agreement with this pyramid or snowball system scheme, but with the later argument, we're sort of in agreement with that, I would say. Yes, later adopters are going to suffer because they hold longer onto the fiat currency, which will always devaluate over time. I think that's always also your argument that you go like the fiat system is basically created also to continuously impoverish us. Yeah.
Absolutely. Yeah. Well, and people are living that. Can you just go back to the top of that paper just to show the two gentlemen that wrote it?
Two Germans from my country here.
Yes. So first, I would say that these two people are research analysts for the European Central Bank. So their ability to be neutral or unbiased is I would say questionable. If you Google both of these gentlemen, their names, and type in Bitcoin after their names, you'll probably find with very little search that they've actually issued several previous papers to this over the years. The most recent one in 2022, where they proclaimed that Bitcoin was dead at, I think it was $20,000 US or $17,000 US. And that it was a bubble and a pyramid scheme that had collapsed, and good riddance. So it wouldn't, I don't think it's beyond the realm of possibility that they're a little bit upset that it's at, you know, 50, 60, $70,000 most of this year. And has rebounded quite nicely from their last article. Look, it's a growing asset and it's going to be volatile. So that's all I'm going to say about the people that wrote the article. The last thing I would say is they put this out there as a research paper, but they chose to publish before getting feedback from any of their colleagues. So we're not going to get into it today, but there has been a rebuttal by many other research economists out there stating all the flaws in this paper, which I'm not going to get into because some of it gets kind of technical, some of it gets into mining. I think the gist of it from a public relations standpoint is we have two gentlemen that work for the European Central Bank that if you read through this, I actually wasn't offended by this. I thought it was a great advertisement as to why the general public should adopt Bitcoin, because they basically state in here that the fiat system, you know, is going to collapse if Bitcoin's successful because the fiat system stinks. And that's kind of what they don't mean to allude to that, but they do suggest that in the paper. Now, will latecomers to Bitcoin, under the scenario they put out, will they benefit far less than people that came in earlier? In terms of price appreciation, the answer would be yes. In terms of use, however, and the benefits of it, the answer is no, because it is a currency that cannot be debased. So even if you came in at the end, you might not get Bitcoin at $1 or 10 cents or even $10,000. But what will happen is the Bitcoin that you do accumulate from that point forward and use for savings, for loans, for trade, for purchases, all kinds of things, that Bitcoin will always be a steady price. It won't be inflated, or the value of it won't be inflated away. The purchasing power of it won't decrease because of printing. So the benefits, even for the end user, are what Bitcoin was supposed to be. That's what Satoshi Nakamoto, that was the point of it, was that the money doesn't get debased by governments or the world elite, or whoever the boogeyman is of the moment. So no, the latecomer still benefits. The other thing I would point out, I find it kind of rich, no pun intended, coming from people that work for the ECB, talking about the impoverishment of society when the people that work for the ECB and the U.S. Fed and most central banks around the world, quite frankly, um, they and their friends and their allies are the ones that benefit most from money printing. We, the population, the end users, are the ones that are impoverished by the amount of money printing they do. So I do think that it's a little bit hypocritical to state that. And the last thing I would probably point out, just based on that first paragraph that you were referring to, is how is that their analogy? If Bitcoin goes to $10 million per coin, how is their analogy any different than every other investment in the world? Like, if I bought real estate in Manhattan in 1785, it's worth a lot more today. And the people that want to buy it today are going to pay a lot more than what I paid in 1785. Or if I bought Apple stock in 1985, or 1995, it's worth, I got it for a lot less than what people would pay for it today, or Google, or anything like that. So whether it's real estate or land or gold, um, those who settled countries near water and sun, did their populations tended to do better than those who settled countries in areas that maybe were a little more desolate and dry. That
Yeah,
analogy just, sorry.
yeah, I mean, and just I was just thinking the real estate analogy which you just made. I mean, we can see now in real time that people are being impoverished when it comes to real estate and buying a home, which is
Right.
now has become unaffordable for large parts of the population, especially of the middle class. If you look at what's going on in terms of prices, so. I mean, we're just experiencing what they are trying to blame on Bitcoin. We're experiencing this in real time when it comes to real estate. Like we
Right.
can't afford a
And
home anymore. That's it.
and what's happening is, um, the reality is it feels obviously that things are getting more expensive, but my take on it is real estate is not going up that much in actual dollar value. Um, the purchasing power of all of our currencies is going down more quickly. I saw something this week, actually. It was quite interesting. The U.S. stock market is at record highs. It's like the fifth year in a row or something like that. It's at all-time highs when measured against the US dollar, when we price our stocks against the US dollar. If you measure it against gold, because Bitcoin wasn't around in the 90s, but if you measure it against gold, the price of the stock market is at the same value as it would have been in 1996. So because we get paid in dollars or currency, if you will, because it depends on where you are, whether you get dollars or pounds or euros or whatever. But we transact in these national currencies that continue to get devalued ever so quickly. So we think things are getting more expensive. But when you compare something to a barrel of oil or an ounce of gold, you realize that it's actually the purchasing power of our currency that's dropping. So we feel that in the cost of things going up, but the things are only going up because the values are going down, if that makes any sense. It's not I saw a gentleman this week and he said, we have to stop calling this inflation. He said, inflation, by definition, is when demand exceeds supply. We as consumers start to bid the price of whatever it is that we're trying to get. We bid the prices up. That's inflation. He said, what we're experiencing is devaluation of the currency. There's not excess demand for eggs or bacon or bread. It's the same demand roughly that it was a year or 2 or 5 years ago. But the price has gone up. So that's not inflation. And so getting back to this paper, in a weird way, when I read through it, I thought, They're accusing Bitcoin of basically creating the destruction that the European Central Bank and the U.S. Federal Reserve and these big central banks around the world, they're accusing Bitcoin of doing exactly what they have done, which is impoverishing the vast majority of us, quite frankly. And then to your point, the only ones that are probably even keeping their heads above water, I'll call it treading water, are people that own hard assets or scarce goods. So if you were, you know, if you own real estate, then you're probably treading water. You're not really any wealthier because when you sell that real estate and go to spend your currency, everything else that you were going to spend it on is also gone up, so much that you're paying 30% more for a car today, a new car anyway, than you were 4 or 5 years ago. You're paying more for art. You're paying more for alcohol. So you're not really ahead, even though your bank account looks like you. You're treading water. So the reality is, in my opinion, that Bitcoin solves that problem at the end, because I don't know what the value of a Bitcoin is going to be worth at the end, according to their scenario. But whatever it is, once it gets to that point, it stabilizes, and the end user, the latecomer, can now get paid in Bitcoin, let's say, and not have to worry about the devaluation of the currency at that point, because no government, no bank, no world elite class can create more of it to devalue the currency. And so, go ahead.
Yeah, I think that's a good point, which, of course, they're excluding a lot of things from their paper, is that, well, yes, maybe the latecomers would not have benefit from Bitcoin if fiat money in the future would not be devaluated anymore, like
Right.
as if that's going to happen. So the assumption is somehow, well, in the future, basically having fiat is it's the same thing if you have fiat or Bitcoin. So I don't know, that seems to be their underlying assumption. And then they go like, well, that's why it's a pyramid scheme, and you can only benefit from that if you're in early, and later adopters only have like no benefits anymore at all.
Right.
But as you point out, yes, the benefit is still there because you then own something which cannot be devalued. And I also wanted to point out, what was it here? Yeah, anyway, it's a good point to say, well, who are the authors? I think I'm really impressed that you did your background reading, because it's always interesting to see what did they, what are they, where do they come from? And obviously they have a bias, which they're not disclosing in this paper. They should, from the beginning, say, well, we've already published these papers in the past, so obviously we have some kind of bias, but we're being transparent about this here, and so that you, dear reader, know this. And in fact, what you're saying is also, not only did their previous predictions not come true, they're sort of now doubling down on their claims and not even rectifying their previous mistakes, which they made. And thirdly, just one more point.
Yeah, go ahead.
Yeah, it's just here, they write here. While most economists argue that the Bitcoin boom is a speculative bubble. Now, I find this an interesting argument. Do they have statistics on this? Is this really the case? This, again, sounds like a claim which goes, as far as I can see in the paper, unsubstantiated. Like, is that really the case, that most economists argue that Bitcoin is a speculative bubble? I just want to draw your attention to something which is also in this article here, where they say later on down in the article enough, for example, where is it? So in this rebuttal, it says, in the past, it was claimed, for example, that Bitcoin was, here it says, while simultaneously citing a false claim that made by an earlier research paper that Bitcoin is the preferred method of transaction for criminals. According to a May 2024 report from the United States Treasury Department, fiat cash remains the undisputed king for illicit transaction. Oh, what a surprise. So it's unclear to me also sometimes how the paper is worded. A majority of economists claim this is a bubble. Bitcoin is used for illicit transactions, illegal activities. Is this now propaganda, or is this fact? So
Well,
it's like a mix of both. It's like that's what it seems to me.
well, and then when I did my further digging into this, they then stated afterwards, when they were kind of called out on this by several other researchers and economists, um, that this was put out as a research paper, but they admitted that they published before they got any response back from any of their colleagues. So if it's a research paper, then you would send it to colleagues and others in your profession and say, well, what do you think? And get feedback. And if there's contrarian opinions or ideologies, then maybe you take that into consideration. So I know a group of people. I know there's one for sure was an American economist that as soon as this came out did a rebuttal, but he actually sent it to some of his colleagues around the world, and many of them signed on and added to the rebuttal. One of the things that, and again, I don't want to get into the modern era of wokeism and DEI, but there's this privilege that seems to come from the West when I read stuff like this. When they say, well, nobody uses it as a currency. Well, nobody in their life uses it as a currency. But in sub-Saharan Africa and places like Nigeria, it's used by 40% of the population as a currency.
Oh, wow.
So again, how well researched is this if you don't know that there are actually hundreds of thousands of people every day in different places around the world, probably millions of people actually, using this as a means of trade because of obviously issues with their own local currencies. So it's disingenuous at worst, not well researched at best, um, to make these claims. And then, to, as you said earlier, to have a history of basically being negative against something, after okay, well, this, you don't like this, okay, fine. And then you do another paper a couple years later that basically says the same thing. And then another paper a year or two after that. It starts to read like there's an agenda. And to me, the way I read this, I'm going out on a limb a little bit here, but this to me sounds like not so much a scare tactic, but a preemptive way to get people riled up about the potential for some people in fiat terms to make a lot of money. The one thing that the media and governments have done very well over the last, I would say, 15 years since the 2008 financial crisis, is get all of us in Western culture worrying about how much money somebody else is making. And, we had issues with the billionaires 15 years ago. And then we had issues with the mega millionaires. And now, depending on where you live now, I know it's happening here in my neck of the woods. Now people are having issues with people that own more than one property because, as you said, real estate values have gone up so much. So it all just seems like a distraction to me. Don't look at what we're doing to cause this mess. Look at what your neighbor and your friends and your family are doing, and they're benefiting and you're not.
Yeah, that's why I said, like, is it propaganda? Is it research? I mean, I could rephrase myself. Is this a communication tool, or is this really a research paper? And it seems
Right.
it seems to be appearing as a research paper, but it's actually a communication tool, which of course is trying to how to say it, foster resentment against
Right.
Bitcoin, because the majority of population doesn't own Bitcoin.
Right.
So they're easy to sort of like yeah,
Yeah.
basically get into their resentment, get their resentment up against Bitcoin. And
Right.
the it's interesting what you say about Nigeria, that you say there is a use case for Bitcoin only in other parts of the globe, which we are not aware of. And I think that's important to mention, and probably that needs to be studied and understood why it's being used there. But I also want to point out that in many cases, or what this reminds me also is, again, the beginning of the internet, where people said, what's this internet? This is,
Mm-hmm.
you can't use this for anything, this web browsing. It's
Mm-hmm.
slow. There's okay, well, you can sort of like look at dirty pictures, and that's about it. But
Right.
there's no use for this. You can't sell anything, or you can't. There's no way to do commerce on this, or use it for like a business case, right? And
Right.
so this was the argument in the beginning a lot. And then we saw, drastic change. So, there's this theory also that, many use cases of Bitcoin are still unknown at this point because we just don't know what it can be used for. Um, as the only, let's say, global limited, I don't even say like limited network, which we have in the world, where basically the basis of this network is a limited space. So there could be many use cases. Uh, what's his name, pointed out that it's similar to people didn't know what the use case was for Manhattan Island.
Right. Yeah. And as you so eloquently put out, we didn't know what the internet was capable of. I mean, 30 years ago, probably to the day or to the month, it meant nothing to 99% of the world. Today, um, it's most people don't know how to operate their lives without it on a daily basis. You know, um, I talked about Africa. As poor as many of the nations are in Africa, most people have a cell phone, have a smartphone, or actually, let me rephrase it, have a cell phone that is internet capable. So not necessarily a smartphone, but they can certainly text one another. And, I would say if you go 10 years after the internet, we had social media in the early days of social media with MySpace and Friendster, in the early days of Facebook. This was just a place for teenagers to hang out and flirt with one another and share dirty pictures and all kinds of stuff. Well, 20 years later, it is so powerful throughout the entire world now that governments are in fear of social media for all kinds of reasons, because we've gone from, as we talked about, maybe flirting with one another to overthrowing totalitarian regimes or outing people doing crimes, or like the internet has become, or social media, sorry, has become this very useful tool for so many things that we could not have even imagined 20 years ago. And now when you add artificial intelligence to the internet and social media, I mean, we don't know where that's going, but it certainly looks to be something profound over the next probably 20 years. I'm not comparing Bitcoin to all those things. What I'm saying is it's a technology that is now probably, if not used, certainly held by hundreds of millions of people worldwide, maybe 250, 300 million people. And 5 years ago, it would have been less than 100 million people. And 5 years before that, it was probably less than 10 million people. So the network effect is massive. And the last thing I would probably say to the comment in the art in the paper about it has no value. I was recently watching an economist, and the name slips me, so it wasn't anybody that I recognized, but they were asking him about many things, but Bitcoin came up. And the person said, do you think Bitcoin has any real value? And the economist said, I don't know much about Bitcoin, but he said, yes, it has value. And the reason I can say that it has value is because it has a network effect. And so he said, I don't know what that value really is, but if there's a group of people, in this case, hundreds of millions of people, that say that it has value, then it has value. It's as simple as that. They believe it has value, then it has value. And he said, no different, and this is the part I thought was kind of funny. He said, no different than the dollars in your pocket. They're not backed by anything. They have value because we believe they have value. And I thought that was a pretty interesting comment from an economist who admitted that he didn't really know much about Bitcoin, but he did understood that there was a network effect there, and that even if it's 5% or 3% of the global population that believe that it has value, that's still hundreds of millions of people.
Yeah, I mean it's an interesting analogy, but I want to also get to our one more article because we are going to close here in 5 minutes, and just to your point about the growth of social media and, and that things have value to which you ascribe value. And I find this an interesting statement in terms of currency, but I also find this an interesting statement when it comes to sources of information. So more and more people ascribe value to social media when it comes to their source of information. And they pivot away from centralized, I don't know, media stations or corporations and all that, media companies. And here it seems to be the same dilemma, that people are pivoting towards Bitcoin because fiat is not doing that anymore, which they are used to having, which is that they're able to accumulate some wealth, some personal wealth,
Right.
be
Yeah.
it a very humble amount. I just want to point out here, there's another central bank, the central bank, or from Minneapolis, the Minneapolis Fed also came out with this paper suggesting a ban or tax on Bitcoin. Also, again, the argument is very interesting. It's already feeding into our conversation. Suggests that a ban or tax on Bitcoin could ensure its ability to run permanent budget deficits. Oh, okay. So here, at least they're honest. Like, I mean, so here they say, in an economy where the government tries to maintain permanent deficits using nominal debt, the presence of Bitcoin creates problems for policy implementation, they say in a working paper. It introduces a balanced budget trap, an alternative state where the government is forced to balance its budget. Okay, so we don't want that. Okay, we don't want them to balance. So that's already the basic, the new status quo is now, that's going to happen no matter what. And to the point of, actually, they are now confirming our point that we say it doesn't matter if you're a latecomer, because apparently this is a long-term policy not to balance the budget. So don't worry
Right.
about that if you're late, because it's always just going to continue and continue. There seems to be no end to that, according to the Fed here, the Minneapolis.
Well, at least they're saying the quiet part out loud. You know, one of the things that you and I have been talking about for the last several years is the devaluation of currencies. And it's not going to stop. And we've talked about that. But now, a branch of the Federal Reserve, the Minneapolis Fed, there's 12 Federal Reserve banks, Minneapolis being one of them, is admitting that they're never going to stop spending. They will never balance a budget. Therefore, they will always devalue the currency. And Bitcoin scares them because if it were to be adopted by the masses, it would force them to run a balanced budget.
Wow.
So in a weird way, this article and this paper released by the Fed, the same week, by the way, that the other article came out, is actually, again, both of them are actually, to me, showing the masses why they should adopt Bitcoin. Because if they don't, this article tells you what's going to happen. You will be forever losing value in your currency, getting paid less and less every year for the work that you do in perpetuity if the central banks and the governments have their way. So I thought this was shocking. I couldn't believe it made the light of day. I don't think when they published this, I don't think they realized how it could have been seen. As you just pointed out, you took one look at this and said, oh my God, they never planned to stop.
We have to change our policy. My God, like, we don't want to change our policy. No. Yeah.
So it's incredible, and I'm glad it came out, but it's just amazing. They actually tell us, if we pay attention, they tell us what they're doing and what they're thinking. So hopefully more and more people will start paying attention. And I would just sum up your point about social media, because I know we're running out of time. The highest rated show on cable television, news show anyway, draws about 2 million to 2.5 million viewers. CNN's top rated show, about 700,000 I'm talking about the US, by the way, sorry. I should have qualified that. And last week, Joe Rogan interviewed Donald Trump, and between YouTube, Spotify, and I think X, it had over 100 million views in 4 days. Now, some of those could be duplicates. Some people could watch it 10 times. I don't know. But if the highest rated news show in the US gets a nightly view of about 2 to 2.5 million people, Joe Rogan has 17 million subscribers on Spotify. Social media is where we now go for our news. And the last thing I would say is it came out this month in October that the #1 streaming network in the world now is not NBC or CNBC or any of the big cable providers, ABC. It's nobody in Europe, it's nobody in Asia. It's YouTube. Majority of people watch YouTube now, whether it's for news, for sports, for movies, for TV shows. That's where they go. So that's how things change in a very short amount of time, like we talked about, 15, 20 years with technology.
And we still haven't quite understood how this is, as we said before, how this is changing us. I mean, we're running out of time, but apparently, like Bitcoin is changing us, how we view fiat money, government spending, so how we view money in general, how we view politics, and social media is also changing us, how we see the world and how we see politics. And what am I trying to see here? I don't think we still understand completely how this is changing us. So we still there's not enough research philosophy on this to say this is how societies are changing because of the internet, basically because of social media.
Yeah, I would agree. Yeah.
We we're out of time today with this very interesting discussion. Last sentence here, it's something they dug out a paper. It says money is memory. I like that sentence because it applies very nicely to Bitcoin. They also say the internet never forgets. I think that's sort of like Bitcoin is forever, basically.
Yeah.
So it was great talking to you.
Yeah, it was great talk and interesting articles.
Yeah. So see you next time.
Okay, thanks. Talk to you soon.